This is the Asia Trade. I'm Paul Allen in Sydney.
I'm Avril in Singapore. The top stories this hour. Iran warns the US and Israel against intervention as protests against the regime enter their third week with casualties mounting. Asian stocks set for a positive start to the week with Wall Street at a record. A weaker than expected US jobs report supporting expectations of further Fed rate cuts. And growing speculation of a snap election in Japan with Prime Minister Takaichi's support holding at historic highs.
Okay, let's take a look at how markets closed in the US at the end of the week. We got S&P futures a little bit softer at the moment, but it did round out to be a fairly positive week for the US. US tech again having a strong day. Sandisk was up about 12%, but futures a little bit softer at the moment. We've got some interesting data as well. Non-farm payrolls growing slower than expected in December. Unemployment edging down a little, so that market expectation of a couple of Fed rate cuts this year remains intact. We're going to get CPI numbers for December out of the US on Wednesday, the first clean reading we've had there since the shutdown. That's seen remaining steady on year at 2.7%. But let's get to the big geopolitical event of the day. You see crude prices there, not a lot of change at the moment, but the situation in Iran being very closely watched, the regime there coming under pressure. We'll get to that in a moment. But developments also in Venezuela, the Exxon CEO calling the country uninvestable at the moment. Avril.
Yeah, Paul, when it comes to Iran, it has warned the U.S. and Israel against any intervention given these nationwide protests, and casualties are mounting. Certainly, world leaders, investors, they're watching for signs that the Islamic Republic could be overthrown, and this could be a change that would transform global geopolitics, the energy markets as well. Bloomberg editor Tony Schutzka is following developments for us. So, Tony, we've seen protests in Iran on this level before, but what makes it different this time around? And to what extent is this feeding into expectations of regime change?
Well, I think first of all, it's hard to overstate how momentous it would be if the Iranian rulers were overthrown or somehow, taken out of power. If you recall, the revolution or the Islamic Revolution in Iran and the fall of the Shah date back to the late 1970s. That's a very long time. And I think, the one answer to your question, what has changed is essentially Donald Trump back in the White House for a second term. I think what sort of emboldened this speculation, apart from the protests themselves in Iran, is of course his, the daring U.S. raid in Venezuela, which was meant to show U.S. reach, and as we recall, also the U.S. bombed Iran's nuclear sites last year. So there's some long-term history and some recent history that sort of add up to this moment. Combined with the economic crisis in Iran that seems to have taken a turn for the worse in recent months.
Tony, the idea of a more cooperative regime in Tehran, obviously a very appealing one for the U.S., but the reality of getting there, fraught with risk. How much appetite is there among the Trump administration to pursue this idea? Because, the president did say the U.S. would get involved if protesters were harmed.
Yeah, he's on the record as saying that, and there was this comment about 10 days ago where he said in a social post that the U.S. was locked and loaded and ready to go if Iran started killing the protesters. Well, I mean, to put it cynically, Iran has been killing protesters, and the death toll, the latest number we heard, is more than 500 now. Where does that leave Trump? We heard on Sunday that he's been briefed on a range of options for military strikes and also non-military sites, and that he's seriously considering authorizing an attack, according to an unnamed official. Where does that leave us? That will probably become a bit clearer in the days ahead, possibly. The other side is the son of the late former Shah of Iran, who was on a remarkably extensive Fox News interview on Sunday in the U.S., who is being positioning himself and is sort of being positioned as a potential transition or leadership figure. So there are elements in play that make this sound realistic. But of course, how do you do it? And somebody like Reza Pahlavi, the son of the Shah, was explicitly also saying we don't want to create an unstable, sort of chaotic situation in Iran.
All right, Bloomberg editor Tony Chuchka there. For more on this, let's get to Juan, professor of history at the University of Michigan and a specialist in the Middle East and Islam. Professor Cole, thanks so much for joining us today. Now, just to start off, we have seen protests like this in Iran before, opposition like this before, but is there any reason to think that this time it could be different?
Yes, one difference now compared to past mass protest against the Islamic Republic of Iran is that more social classes are involved. So in 2009, when you had the Green Revolt, it was mainly students. And the bazaar, the traditional merchant class, the money changers and gold dealers and artisans didn't join in. This time, it actually began in the bazaar. So the business classes, who are the backbone of the regime, are unhappy. And now they have been joined by many other social classes, not only students, but professionals, lower middle class people, and in many cities throughout the country. So this is certainly a different phenomenon than you had in 2009.
If the regime were to be removed, and we're entering the realm of hypotheticals here, what could possibly replace it? I mean, that the son of the Shah has been promoted as a possible leadership option, but how well would he be received by the very large, diverse population of the country? Is there a risk of a power vacuum here?
Yes, there is a risk of a power vacuum, and you saw that when the United States overthrew the government of Iraq, which in many ways still has not recovered as a society from that. The likelihood of the Pahlavis returning to power is about the same as that of the Russian royal family bringing in a granddaughter of Anastasia and putting her in Moscow. I think it's fantastic. I don't think that the masses in Iran want that. But what they do want is not clear, because this is a multi-class expression of discontent. So it's very easy for large numbers of people to agree on what they don't want. They don't want the collapse of the Iranian currency, which has just occurred, which it means all imports are expensive. It means they can't afford to travel abroad, and so forth. And this is the result of U.S. government policy, Trump policy mainly, but Biden continued it and Trump has reaffirmed it, of putting the Iranian economy in a vice. Iran is under a kind of financial and economic siege that you don't normally see in peacetime without a war, and even has difficulty selling ordinary commodities like petroleum on the world market because of the U.S. sanctions.
Certainly, that's throttled the Iranian economy, but to what extent do you think the U.S. might consider actual intervention beyond what we already saw last year in terms of strikes directly?
Well, Trump has a record of bombing places, but he has also a record of no follow-through. And were he to make himself feel good about intervening in the situation by bombing government installations or military bases in Iran, there is a big danger that he would actually be supporting the regime, because the regime's story about the protests is that they are fifth columnists working on behalf of the United States and Israel, and people in Iran don't want to be traitors. It could well be that a Trump massive intervention or a bombardment could push people away from the protests.
What do you think we should be watching out for next in terms of the potential regional and global implications and the very real threat of a political vacuum, as you highlight?
Yeah, well, I'm sure that all the neighboring countries, Saudi Arabia and Turkey, Pakistan, Iraq, are all very worried about a power vacuum in Iran and the possibility of long-term discord. Iran is a multicultural society. You could see ethnic conflict, as you saw in Iraq. You could see religious conflict. And I think that what we should be looking for is whether leaders emerge. So far, this revolt is kind of in the streets. It's inchoate. But do leaders emerge with specific and plausible demands? Will the military intervene? Very frequently, popular revolts end when there's a military coup of sorts. So that's what happened in Egypt in the Arab Spring. And Iran has actually more than one military. It has the Iranian Revolutionary Guards, which are loyal typically to the supreme leader, Ali Khamenei, but it also has a conventional army. At the moment, we don't know what the leadership might look like of a post-Islamic Republic, Iran. And that's going to be important to see what emerges. The other thing is how the regime deals with this problem. If they go on killing protesters, that has a ratcheting effect of radicalizing people against the government.
Juan, it's been great to get your insights on this. Thank you so much. Juan Cole is professor of history at the University of Michigan. Let's take a quick look at how Asian markets are faring. Of course, watching dollar-yen over the weekend, we got those reports about the potential for a snap election coming soon out of the country. But it's mostly also that risk on you're seeing tracking what we saw on Wall Street from Friday following those jobs numbers. We have more ahead on the Asia trade. This is Bloomberg. Major U.S. oil executives have expressed caution to President Trump about re-entering Venezuela. Exxon CEO Darren Woods called the nation uninvestable during a Friday meeting with the president and oil industry executives at the White House. Though Woods says the company is prepared to put a team on the ground if it gets an invitation from the Venezuelan government with appropriate security guarantees.
We started from the beginning to put the team together so that if and when it was needed, we could hit the ground almost immediately. So we can hit the ground within the next couple of weeks.
Deals for more U.S. investment in Venezuela. He says Washington would provide necessary security guarantees for oil firms.
Our giant oil companies will be spending at least $100 billion of their money, not the government's money. They don't need government money. But they need government protection and need government security that when they spend all this money, it's going to be there so they get their money back and make a very nice return. The plan is for them to spend at least $100 billion to rebuild the capacity and the infrastructure necessary.
Well, let's get the latest on Venezuela with Bloomberg senior editor Wendy Benjaminson in Washington. And Wendy, is it fair to say there seems to be a bit of divergence between what the president would like to see happen in Venezuela in terms of oil investment and what the oil majors really feel is viable?
That's exactly right. There is a big disconnect. There is a lot of them being very polite in the room, except, well, I mean, then the Exxon CEO sort of took a step back and said, now, hold on a minute, we're not sure what's going on here. I mean, one thing to note about these security guarantees is the State Department has already suggested that all Americans leave Venezuela because they can't guarantee their safety. Remember, they captured Maduro and left the regime in place. And there are these colectivos going around, demanding to see people's phones and things like that. And so if oil companies are going to send their workers, let alone themselves, the executives, down there to restart this oil industry that has already been nationalized and taken away from the private companies twice before, they're really going to have to feel that it's safe and worth it, and that there will be a return on this massive investment to rebuild a defunct oil industry.
Wendy, it's also about where this Venezuelan oil is going and flowing. What are we hearing about whether it is going to continue going into the likes of Cuba, for example?
Well, Trump has said just today that Cuba gets no oil, Cuba gets no money. They're cut off. Remember, they were Venezuela's closest ally. They provided a lot of things to Venezuela, including military personnel, many of whom were injured or killed in the raid to get Maduro. And they're the region's closest allies. But Trump is cutting them off. And I think the hope is there that Cuba will collapse, that Cuba's economy will collapse without its partner Venezuela in the region, which this administration believes would be good for the region. And so that they could, get a new government going there. So Cuba will be cut off under this plan. And then whether Russia is able to fill that in, or China, we would have to see. But of course, there's a quarantine in the seas around these countries, so not sure how that will all work out.
Wendy, thanks so much. Bloomberg senior editor Wendy Benjaminson in Washington for us. Now let's take a look at how U.S. assets are faring across the board. Of course, we've been seeing the dollar's continue climb and the upward pressure on yields following on from the data in the U.S. on Friday, which showed us a lower than expected jobless rate, but also slower than expected payrolls growth. We are watching out for, of course, the U.S. inflation number, CPI, for the month of December later in the week as well. Let's bring in Louise Loo, head of Asia Economics at Oxford Economics. Great to see you. So we are looking at a U.S. economy that may be showing signs of slowing in the labor market. What is your sense of the weakness, and to what extent does that push back a bit the expectations of a Fed rate cut?
Well, I think markets and ourselves as well expect that the Fed will cut another 50 bips. I think that expectation remains broadly intact. The recent data that we got last week, the labor data, I would say is not exactly positive. It's more like a mixed bag. You can kind of pick and choose what you like. By and large, we like to focus on some of the more alternative data. So the Beige Book that's coming out this week, that's something that we are focused on. But by and large, the November data, they're quite noisy because of the shutdown-related disruptions. So we would have to see, and I think the Fed would want to see more confidence. We want to get more confidence around the trajectory of the data before it decides on its next move, which is why we are expecting that we should see a protracted pause in the Fed's action for at least the next 1 or 2 quarters. Now, having said that, obviously inflation data coming out this week is one to watch. There we're expecting a slight sequential acceleration, but nothing much that should drive potential policy panic, if you like.
To what extent, to your point about potentially being able to pick and choose the data, might Fed officials do that? And what is the risk of acting too late then?
Yeah, I think that is the theme for the last year, right? Central banks being behind the curve, which is why I think if we look at the data, it really depends on what the Fed is focused on. Is it more focused on inflation? Is it more focused on emerging or existing vulnerabilities within the labor markets? We think that it will be more focused on the latter, which is why the risk is always towards more cuts rather than less. And so looking into this week's data, to the extent that inflation data shows a pickup, I think that will be more of a non-event for a lot of market participants as well as for the Fed.
Louise, we've also got a policy meeting from the Bank of Korea a bit closer to the Asia side of things this week. Not expecting to see any change there, but considering the enormous tailwinds the Korean economy is getting from the AI story, the chip makers at the moment as well, safe to say the Bank of Korea might be done here?
Yeah, I think you're right. That is obviously a very different story half a year ago when we were expecting maybe about 25, 50 more bits of cuts. The Korean, I would say the Bank of Korea is much more focused on not so much the tailwinds that you mentioned, although they're helpful, but more focused on things like financial stability, what's happening on the Korean won. Obviously, a strengthening dollar is not particularly helpful for the trajectory of the Korean won. So they will kind of wait and see where some of the recent data, as particularly around household loans, credit growth, how the Seoul housing market, how that's trending before it decides on the next step. But again, there I think the risk is on the opposite. We could potentially see a more hawkish hold, if you like, as it contemplates some of these financial stability concerns.
We also had the news over the weekend that we might be seeing an election in Japan possibly next month. We've got markets in Japan closed today, but considering the variables around this, where do you think this is heading? What's the potential future of Sanae economics?
Yeah, well, I think the confidence around the administration seems to be, very clearly growing. Markets will be very, very much focused on things like fiscal risk, things like what the policy agenda could entail going forward, and whether or not that means that the risk of Bank of Japan, again, falling behind the curve is potentially increasing with a stronger mandate for Takaichi's administration. So I think going forward, again, the focus around Japan is always going to be around debt sustainability concerns. And this, I think, really cements that going forward. Whether or not that snap election is coming in February, is quite likely that policy would stay quite expansionary, whether or not that goes through.
It's also interesting how overall Asia's economies have been a bit more resilient despite the policy shocks of the past year. We're still waiting out for a U.S. Supreme Court ruling on levies. What is your sense of how resilient they might continue being this year?
Well, I think we are a lot more confident now looking at 2025 numbers. A lot of the commentators that we speak to, the market participants that we speak to, is really seeing the Supreme Court ruling as more of a development that, maybe changes some of these short-term market movements, but not really the long-term trajectory of these economies. And I say that because there are obviously a lot of other constitutional powers that President Trump could have. The Section 122 that could replace some of these IEEPA tariffs if they do get struck down. That I'm not a constitutional lawyer, but that constitutional power does allow President Trump to put in something like 15% tariffs for at least the next 150 days. Now, 15% tariffs is pretty much ballpark where Asian economies are seeing their U.S. tariffs. So, by and large, these tariff numbers may not change that much, but I think to the extent that the tariffs are struck down is obviously positive for global trade in general.
Louise, good to chat. Thanks very much. Louise Loo is head of Asia Economics at Oxford Economics. We have more ahead on the Asia trade. This is Bloomberg.
The latest developments out of the U.S. Thousands of people marched on Saturday to the site of Minneapolis where a federal agent shot and killed a woman during a confrontation. That's as national debate rages over whether the use of deadly force was justified. The Trump administration claims the officer acted in self-defense, and Homeland Security Secretary Kristi Noem says hundreds more federal agents are being deployed to Minneapolis.
We're sending more officers today and tomorrow. They'll arrive. There'll be hundreds more, and in order to allow our ICE and our Border Patrol individuals that are working in Minneapolis to do so safely. We're going to continue to, if they conduct violent activities against law enforcement, if they impede our operations, that's a crime, and we will hold them accountable to those consequences.
President Trump's demand that credit card issuers cap their interest rates at 10% for a year is taking aim at a crucial business line for the banking industry. It's part of the president's recent focus on reducing consumer burdens, including announcements aimed at lowering housing costs. We have more ahead on the Asia trade. This is Bloomberg.
Japanese media reports say Prime Minister Sanae Takaichi is considering calling snap elections next month. Adding to the speculation, remarks from a party leader in her ruling coalition who cited a shift to a new stage in politics. Let's bring in our chief North Asia correspondent, Stephen Engel. So, Steve, speculation rife about a snap election that could be held as soon as next month.
Yeah, that's right. I mean, we could see a dissolution of Parliament coming up in about 11 days' time. That's when the new session of Parliament begins on January 23rd. It's all about timing, obviously. When Takaichi-san took over as prime minister in October, her ruling LDP party did not have majorities in the upper or lower houses. Since then, they have had a razor-thin majority in the lower house, essentially because of its partnership with the partner Lee Shin, win, as well as 3 independent lawmakers, but it's razor thin. She can dissolve the lower house and call this snap election. As far as the upper house, though, she's still 6 seats short of a majority in the upper house. But we're hearing from the opposition Constitutional Democratic Party that they're in election mode now because it's looking increasingly likely that Takaichi-san will call or will dissolve the lower house on the 23rd, so 11 days' time. And media is rife with speculation, including the Yomiuri Daily, that the election could be held as early as February 8th or the next week, February 15th. So it looks as though, again, timing is of the essence. Right now, her polling suggests she has historically high approval ratings, upwards of 70%. So that's why we're likely to see this dissolution on the 23rd.
Steve, we've seen the yen soften again. It's got a 158 handle now. Are we on intervention watch now?
I think we have to be, don't we? Again, Japan's on holiday today, so there'll be possibly volatile offshore trading, but thin trading. But again, at 158.08 is the last number that I saw. What is it now? 158.16. So that is the weakest against the U.S. dollar since January of last year. So 12 months, it has seen that steady weakening, as you can see on the upward trend there against the U.S. dollar. And again, I guess the word on the street is that 160 to the dollar is sort of that line in the sand for the Ministry of Finance possibly to intervene. They haven't necessarily put a number on when they might intervene to support the yen. It's usually the pace of depreciation that would concern the Ministry of Finance. So yes, we are on intervention watch if the pace of declines against the dollar, weakness, goes sharper than they like.
All right, Bloomberg Chief North Asia correspondent Stephen Engel there. Let's bring in Tobias Harris, founder and principal at political risk advisory firm Japan Foresight. Tobias, thanks for joining us. I'm wondering where you would place the odds of Prime Minister Takaichi calling a snap election, and she's performing very well in the polls at the moment. Is this a strategically useful time to strike, and what are her chances of getting a fresh mandate if she does?
Well, I think this came on very quickly. As early, as recently as really last Thursday, she was even saying that she was focused on getting the budget passed, which really is job number one as far as the new diet session is concerned. And there were too many policy issues, there were too many things going on, and certainly the consensus seemed to be that we wouldn't see an election before April. April would really be the earliest. And so the story that broke late Friday in Yomiuri was, I think, caught everyone by surprise. And frankly, I think we should note there's been a lot of pushback, and not just from opposition parties. We've had several reports over the weekend that Asotaro, who of course is one of Takaichi's biggest backers, does not think that an election is suitable at this time. We've had now, of course, the leader of the Democratic Party for the People, Tamaki Yuichiro, whose support is going to be essential for passing the budget, and really the deal that the LDP made with Tamaki was really the key to ensuring the budget was going to pass. He has said that if there's an election, that he will not necessarily follow his promise of supporting the budget. So there's a lot of moving parts here. I don't think we can say it's 100% guaranteed at this point that there's going to be an election.
Yeah, how much public appetite is there for a snap election coming so early? And even if Sanaya Takaichi was successful and won a stronger mandate in the lower house, she still doesn't have a majority in the upper house. So there are going to be challenges anyway in getting her agenda through.
I think that really is one of the questions really, that has surrounded this entire debate about whether she was going to have a snap election, where, of course, yes, you look at her overall headline approval numbers, they're great, they're strong, but of course there have been lots of questions about what her coattails would actually be like, given that the LDP can no longer rely on the support of its longtime coalition partner Komeito, given some questions about the influence of the rise of right-wing parties, particularly Sansaito, on some of the right-wing vote that the LDP needs to bring back. So there were questions, I think, about how the LDP might perform, but I think there was also the question of why an election, why now? And I think if you look at opinion polls, the public is not convinced that an election is suitable at this time. And given that she was so adamant recently that no, there's too much to do, there's too much to focus on, I'm not thinking about an election now, for her to then turn around, I think she's going to face a lot of accusations of opportunism as this debate swirls in the next few days.
In terms of priorities for Takaichi, given the public's concerns about the cost of living, how would you say they are assessing the progress she's made on that front?
That's really the other debate I think that's happening, particularly within the LDP, where you've had a number of voices say, we can't move too quickly because ultimately we haven't really made an impact on the issues that people are most concerned about. We're still vulnerable on that front. The people are still feeling the impact of inflation. You're still seeing food prices rise, seeing another rise in rice prices recently. All of that I think is still going to be weighing on people's minds. And if you add on top of that a feeling that this is just an opportunistic move, she's trying to grab more seats while the going looks good. And also the fact that she then is putting her own budget at risk because, frankly, a February 8th election, a February 15th election, you really only have, they need to get a budget done before the fiscal year starts on April 1st. She's really going to be cutting that close. And it really is going to raise a lot of questions. And I think the opposition is going to be very quick to ask those questions. What is more important to her? Doing things that help the public, getting a budget done that supposedly has all sorts of things that's going to help the public deal with cost of living increases, or is she worried about her political future first? And I think those questions are going to dog, if she goes forward with this, those questions are going to be front and center.
How is the spat with Beijing affecting her political future?
I think in the near term, I don't think it's hurt. I think the public, certainly, if anything, it's probably helped her numbers stay as strong as they have for as long as they have. I think that, of course, the public, does not view Japan as in the wrong here. Polls have consistently shown that majorities think that there was nothing wrong with what Takaichi said. They're, of course, concerned about what Beijing's doing. Interestingly, and I think this is maybe a question for how people might vote, there's a real age gap between how the public is responding to this dispute with China, where older voters are much more divided over, first, whether they support what Takaichi said or whether Japan should be more conciliatory. Younger voters who the LDP is really desperate to bring out in its favor and draw away from Sanseito, to draw away from the Democratic Party for the People, are much more overwhelmingly supportive of Takaichi. So it's interesting to see, one of her theories, taking office was, can I bring, Takaichi, is she the person to bring some of these voters who've been attracted to Sanseito back to the LDP? And maybe this is a sign that actually that could work. But will she lose some of the older voters the LDP has relied on in recent elections? I think that's a question that the party's going to face going forward.
Well, Tobias, your specialty is political risk and advice. What advice would you be giving to Sanaya Takaichi if you were asked about how to handle these export controls from China and whether retaliation is even advisable?
I think Japan doesn't necessarily have the same tools or the same desire to retaliate in the ways that China has been using its various levers to pressure Japan. I think ultimately Japan is going to have to do the kinds of things that it's been doing really for a long time, which is diversifying away from China, and that's not unfortunately it's not a short-term response to China. That's not really something that they can fix overnight. But we already saw that after the incidents in 2010 and 2012, Japanese companies started diversifying. Japan as a whole started diversifying away from rare earths and finding other sources for rare earths and other critical minerals. That process is going to pick up. And just in general, I think if you look at surveys over the last several months, corporate Japan, there's not a whole lot of appetite for new investment in China. I think, of course, there's not a lot of appetite for decoupling either. But when it comes to deepening Japan's engagement, that appetite, I think, is not there. And I think there's a real sensitivity to the political risks in China and trying to find other markets, trying to find other places to go. And of course, that also explains perhaps the interest that we've seen in deepening ties with the United States, even though that comes with its own risks as well.
Yeah, I was going to ask, to what extent do you think there's appetite from the Trump administration in terms of support for Takaichi, given how there are a number of foreign fronts that the U.S. administration, including Venezuela, is having to look at even closer now?
Well, I think that phone call between Trump and Takaichi last year, certainly was a sign that this was not going to be an issue that the U.S. is going to be invested in at the highest levels. We've seen messages of support, from the embassy in Tokyo and from other parts of the administration, but certainly at the presidential level, at the very highest level, they're not investing political capital and showing a lot of support for Takaichi. And of course, you have the prospect of the president going to China in April. That, of course, as far as Asia is concerned, that maybe is, absolutely front of mind more than any other issue. But yes, in the immediate term, there are things that are just taking much more attention. And Japan, in a lot of ways, maybe is on its own. I mean, and again, that can be overstated. We're going to see, I think, this week with the defense minister, Koizumi Shinjiro, he'll be in Washington. Finance minister Katayama will be in Washington talking about supply chain resilience. So there's cooperation there. There's going to be messages of support. But when it comes to actually, really throwing U.S. weight behind Japan in this dispute and trying to get China to back down, that's not something I expect that we'll see from the United States.
All right, Tobias Harris, a principal at Japan Foresight. Thanks for joining us with your analysis today. And you can catch Japan Ahead every Monday, 8:40 a.m. if you're watching in Tokyo. And subscribers can watch live on the terminal using the TV Go function. This is Bloomberg.
South Korea will introduce 24-hour forex trading from July, and this comes as the country plans to relax rules for offshore transactions by September. Let's bring in our chief correspondent for FX and Rates in Asia, Ruth Carson. So, Ruth, part of efforts from the South Korean authorities perhaps to get things more in line for developed market MSCI inclusion. What are you seeing in terms of what this means for the won and foreign investment?
Yes, it's all about that DM status and hitting it hard. In terms of the won and what it means for it, we have to remember that the won is often seen as a bit of a barometer for risk appetite. So very often when headlines are flying about, tariffs and trade wars or anything that's geopolitically sensitive, you'll see the won move. As a result, this would only improve liquidity. It would improve foreign participation in trading the won. So yes, it could mean more vol for the won going forward, but equally it could also go a long way in deepening South Korea's FX markets. And that's an incredibly important thing when it comes to capital flows into all the different asset classes out there, credit, bonds and stocks obviously as well.
Let's talk about the yen as well. It's been fluctuating in a range despite geopolitical risks. Of course, the raid on Venezuela, that would normally have impacted the yen, and now this potential for a snap election as well. So what's driving these moves? What are the macro traders focusing on when it comes to yen trading this year?
When it comes to currencies in general, and rates for that matter, rate differentials matter greatly. And it's the same with the yen at the moment. Investors are still very much focusing on DOJ policy. When or will they raise interest rates quickly enough to support the economy and also the currency? So that is very much in focus. And you're right, Paul. Usually when it comes to times of geopolitical stress, years ago, we would have seen that classic haven bid in the yen. And we're not really seeing it anymore today. A dollar yen is at around 156, 157, 158 on any given day. And again, it comes down to what is the BOJ doing. Now, if we look at the WIRP function, we're seeing that traders are pricing in, the next hike fully in later this year, around September. So again, pressure on the yen set to continue for now.
Part of the pressure from the yen, or for the yen, I should say, is because of the way the greenback is taking up. We got those jobs numbers Friday. We are expecting inflation data this week. I mean, what are the dynamics into the resilience of the greenback?
Yeah, so again, a fascinating one to watch because it is the world's reserve currency. And so you're absolutely right, Avril. Data is very much in focus. CPI coming up. Also, we have all these different risks around the Fed chair, who that's going to be, what it means for policy, and the Supreme Court ruling on tariffs as well, which could have a huge impact on not just trade, but inflation in the economy. So all these things are definitely on the radar of every greenback trader out there. As the news trickles through, we will see how exactly that would be, what would mean for the US dollar, and of course all the major currency pairs, dollar yen, euro dollar, Aussie dollar, etc.
All right, Chief Correspondent for FX and Rates in Asia, Ruth Carson there. The top global headlines that we're following. Bloomberg has learned that a group of European nations is discussing plans to boost their military presence in Greenland. Sources say the UK and Germany are leading the talks, with Berlin proposing a joint NATO mission to bolster Arctic security. Trump's moves in Venezuela and rhetoric on Greenland have prompted European leaders to show a united front on the region's security. The US Supreme Court says Wednesday will be its next opinion day as markets await a ruling on the legality of President Trump's tariffs. The court never says in advance which decisions are ready for release, only that rulings in argued cases are possible. Shares of major US retailers tumbled on Friday as markets were left without clarity on whether Trump can impose tariffs using special emergency powers. Voters in Myanmar returned to the polls in military-controlled areas on Sunday for the second phase of an election. Results from a first phase held last month showed a military-backed party is set to dominate legislatures. The UN and Western governments have rejected this election, citing the detention of opposition figures and the barring of the National League for Democracy, which won previous polls in a landslide. China says it's planning stronger legal and export control measures to safeguard supply chains and national security. The Commerce Ministry says the move aligns with the global trends in the face of geopolitical challenges. Beijing also plans to boost domestic consumption and advance its Export China and Invest in China initiatives to attract foreign investment. More ahead on the Asia trade. This is Bloomberg. Let's take a look at how commodities are tracking at the moment. In particular, we do have oil in focus because a week after the dramatic events in Venezuela, we have an escalation of the situation in Iran. More than 500 protesters now estimated killed in the ongoing unrest there, protests against the ruling theocracy. We've got crude prices showing a little bit of strength now. Brent now up 1% after a fairly sluggish start. Names in Australia moving as well. Woodside Energy better by about 1.25% at the moment. So geopolitics once again moving that oil price. We did see shares in Aramco moving higher in Saudi Arabia in Sunday trading. The shares of Saudi Aramco better by 2.4%. So geopolitics again in the driving seats when it comes to oil prices. Well, U.S. Energy Secretary Wright is downplaying concerns over President Trump's push for U.S. oil companies to spend at least $100 billion to rebuild Venezuela. He spoke to Bloomberg about why he thinks the plan is achievable.
They're excited to be part of Team USA. They're excited to see a pivot in the business conditions in Venezuela. And if several are already on the ground, they're going to ramp up investments, immediately in the next few weeks. So, yeah, can we achieve $100 billion investment over the next 10 years? I think absolutely. But we're 1 week in right now. So with President Trump's leadership, I think we've had a tremendous week of progress, transformation in Venezuela, and excited to see what comes in the weeks and months ahead.
Well, Mr. Secretary, can you outline any of the agreements that the administration was able to ink today? Because President Trump said that there was going to be a few deals made in that room.
Oh, well, look, we have Chevron on the ground in the country right now, largest oil producer in Venezuela right now. I think with some of the moves that we can do with them, which is just licensing them to move ahead with projects they've already lined up. They mentioned the ability to grow their production by 50% in the next 18 to 24 months. This is the largest producer in Venezuela. That's tremendous.
Well, we know they've been there for about 100 years, I think, as the president said. The question is, who will join them, Mr. Secretary? And I'm wondering, when it comes to incentives and security guarantees, what you can tell us. You heard from the CEO of Exxon Mobil, Darren Woods, describing his assets being seized twice. He referred to Venezuela as uninvestable. When you talk about security guarantees, is that a military security guarantee, or would there be private security contractors involved?
Look, we don't know the details of that stuff yet, but what we want to do is put the incentives in place to transform the situation on the ground in Venezuela. I'm sure you've seen the giant rally saying Libre Venezuela. This is a government that for 25 years has just crushed people's rights, crushed their property, made it unsafe. Essentially a large narco, drug, gun, and human running operation. So lots of room for improvement. But I'm quite optimistic that we're going to have to see in the coming weeks how things evolve. But with President Trump's leadership, with the United States' partnership, can we make a pivot and get Venezuela going in the right direction? Absolutely. And the key partners to watch are the ones that are already there. How do their operations change in the next few weeks and next few months? For the re-entrants like Exxon, yeah, that's going to be a longer-term process, of course.
U.S. Energy Secretary Wright speaking with Bloomberg Balance of Power. Now, today we're going to be watching yen versus some of its major peers. Of course, Japan is on a holiday today, so that could exacerbate any moves we see in FX. But the developments over the weekend from Japanese local media talking about the potential for the dissolution of the lower house of parliament within weeks and then a snap election either February 8th or 15th. That seems to be playing out in terms of the continued upward pressure on dollar yen, especially given how aggressive Takaichi-san's fiscal stance has been. Aside from that, we are also watching South Korea markets. It was a relatively good day last Friday for U.S. tech. Let's take a look at how Korea futures are pointing. This might bode well in terms of the chip stocks, SK Hynix, Samsung Electronics. We also saw how South Korean authorities indicated that the 24-hour trading of the won would start from July, another step in the direction towards securing developed market status on the MSCI. So something to watch in terms of market moves for today. Markets open in Seoul are next. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens. And Paul, it looks like those geopolitical concerns coming back to the fore a bit more in the month of January 2026 than it was for the later parts of last year, given these developments in Iran, widespread protests, the concerns of regime change, and potentially this impact on OPEC Plus and the supplies that are coming through from one of the largest producers there.
Yeah, absolutely. And we have seen, of course, protests in Iran before, but the breadth and the depth of these protests suggest that this time it could be different. Up to 500 people believed to have been dead. And, of course, that threat from President Trump to potentially get involved, casting a shadow over things as well, Avril.
Casting a shadow as well because of how the U.S. Supreme Court ruling over tariffs, despite some traders' expectations that we would see some decision or outcome on Friday. Well, that certainly didn't come through. In the early goings, take a look at how South Korea is faring. We are adding on about 0.75% on the Kospi, and this is in large thanks to the chip makers and how they are gaining about 2% each in the early goings. Now, this is following on from U.S. tech doing fairly well on Friday following those jobs numbers. That being said, we are also watching out for the moves in dollar Korea won pushing higher given the strength in the greenback, and of course these developments out of Korea with authorities announcing that July will be the month where we'll see 24-hour trading on the Korean won. Data also out of South Korea showing us for the first 10 days of January exports and imports both falling, something to keep in mind as we watch for the trade trajectory overall. Paul?
Yeah, let's take a look at how we're shaping up ahead of the next U.S. session as well. We've got futures trading a little bit softer at the moment, but you mentioned U.S. tech there, Avril. It was another very good day for some of those tech names on Friday to close out the session. SanDisk up another 12%, which suggests, as you say, Asia's memory chip makers setting up for another positive day and probably a positive week as well. Take a look at some of the movement in bonds also. We've got a little bit of, two-hand spreads. Has been its widest at 9 months. In 9 months, that did shrink to its smallest since the year after that non-farm payrolls data. The market now counting down to CPI for December on Wednesday. That's going to be a clean read. It's seen holding steady on year at 2.7%. But crude prices, you see at the bottom of your screen there, firmly in focus today in the wake of events in Iran, those protests escalating, the death count apparently also escalating as well, and the potential for U.S. involvement also pushing prices higher. Any regime change in Iran would also have momentous implications for the security environment in the Middle East as well. Avril.
Yeah, we're also watching the yen in times of trouble. It has played this sort of safe haven role, although that role has been eroded the past year or so. Let's take a look as well at the continued upward pressure we're seeing on dollar yen past the 158 handle. Of course, we've been talking about what local media reports have indicated in terms of the potential for a snap election as soon as next month, although some of the analysts we've been speaking to already seem to be a bit more conservative in terms of when we might actually see a poll. We are also watching for the potential for more stimulus from Takaichi, San and Co. Let's bring in Homin Lee, senior macro strategist at Lombard Odier. So, Homin, let's start there with Japan. What is your base case in terms of the potential for an early snap election and what this might mean for Japan assets?
So it was a bit of surprise that they're considering mid-February as the timing for the snap election for the lower house, because they still need to pass the next fiscal year budget before the end of March, and that requires kind of corralling of the opposition parties, to support the package. And the fact that they're considering the temptation, we fully understand. Prime Minister Takaichi is enjoying a very high approval rating, and it looks as good opportunity as any to really consider kind of using that, capitalizing on that popularity. We'll have to see. It's entirely possible that because this is basically her ultimate power, it's just a move to kind of bring different opposition parties together so that they could consider the budget seriously. But if they go ahead with an election, even if the ruling party, secures better representation in the lower house and feels more comfortable in pursuing their agenda after the election. Before the elections, we're pretty sure that the investors will try to push very hard for that Takaichi trade of higher topics and weaker yen. So the rumor will definitely, make that a key theme in January for sure.
And JGBs, do you think push further on that front as well, or is there too much pessimism in there?
We think the doom and gloom about the Japanese government bond market is maybe reaching a slightly excessive level. We still have to digest the news of the snap election, whatever decision the cabinet makes on that topic, and also Bank of Japan's potential additional guidance on their rate hike path. And of course, the details of the new fiscal year 2026 budget. So still a few things to digest there. But ultimately, once that's in, we think that yields might be actually more interesting for the domestic investors. So we remain neutral, and we're not aggressively pursuing duration at this juncture. But the idea that it will reach a crisis portion feels a little too aggressive as an assumption, and might be an opportunity down the road, maybe in the middle of the year.
Herman, I'd like to get your view on Korea as well. Had a standout year in 2025, driven mainly by those big tech names. Considering what we've seen in the early days of 2026, is that trade a slam dunk for this year?
Slam dunk might be too strong a word, but we still think it's a market that's getting a lot of support from fundamentals. So for the equity market, for instance, we think the basically close to 40% growth in earnings is quite likely this year, and that's consistent with a rebound that we see in the real GDP growth and the broader market conditions. So we still rank South Korea as a favored emerging market. Apart from the fundamentals, the flow picture remains pretty supportive. And on the thematic front, there's still an ongoing discussion about additional measures for corporate governance reform. And of course, on the AI front, the memory makers are still enjoying a mega cycle in terms of the the demand for the memory chips, and we don't rule out the possibility of even more, boost for the sector going forward in terms of foundry business, given the global demand. So overall, we would argue that it remains a re-rating story. And we think even if it's slightly more volatile this year, it's going to be a pretty good environment for South Korean equity market and risky assets.
In terms of risk, I mean, it was only a week ago that we saw the U.S. dramatically topple the leadership in Venezuela. Now we have an unfolding situation in Iran. Where do you see this heading, and how do you trade around it?
So, our understanding of the expert opinion is that these protests might be quite more serious than the protests that we have seen before. So, obviously, the impact on the global markets runs through the oil market. And we're talking about a country that produces roughly 3.3 million barrels per day of crude oil, and they also have liquids on top of that, and exports roughly half of it, and three-fourths of that export goes to China. Obviously it's far more important than Venezuela in terms of the potential impact on global markets and also China. We have to see if the protests start affecting productions through strikes. So that's key risk that we need to watch. So far, the oil market seems to be delivering a verdict that maybe it's not as severe. But if that occurs, then certainly we will have to see some geopolitical premium in crude prices, and that could introduce a bit of volatility at the start of the year, especially for Asian equity markets. But ultimately, if you think about the long-term picture, we have the EVs carrying share in the auto market, and the boost in production for OPEC countries will probably keep the overall market condition relatively stable over the course of the year. So this is what we're expecting.
Homin, aside from geopolitics, just hold that thought, because we are getting some breaking news crossing the terminal from the New York Times, an indication that federal prosecutors are said to have opened an inquiry into the Fed chair, Jay Powell. And of course, this is part of a long-running clash between Trump and the Fed chair. We have been seeing this in a way unfolding last year, related to how investors think about Fed independence. This time around, of course, this is in relation to the renovation of the Fed headquarters in Washington. What is your sense of whether the concerns about the greenback come back to the fore? Because in the past couple of weeks, that's gone by the wayside in a way.
Well, first of all, for the Fed scenario, we simply assume that Mr. Trump will succeed in replacing the chair in May this year. Now, how he goes about the task, it's a bit complicated because, if Powell doesn't step down in May, then the only chance that he can get, introduce a new member to the board is through the resignation of Stephen Miran as the governor. We're not hearing anything yet on that front, and this investigation is actually pointing to potentially a different possibility. Now, it's a very complex discussion, obviously, but if Mr. Trump is able to put his voice that's more sympathetic to him at the board, then we think it's quite likely that the Fed resumes rate cuts in the second half of the year, and that should definitely weigh on the dollar performance, even if there is a bit of volatility in range-bound environment. But ultimately, the market perception in the medium term will depend heavily on Lisa Cook case and what Powell decides. If the Supreme Court gives Lisa Cook a significant amount of power, then the protection would extend to Mr. Powell as well, despite this investigation. So we'll have to see. But ultimately, a slightly more dovish Fed, more rate cuts in second half, that still remains our base case, and this is kind of consistent with that overall environmental political pressures.
Homin, fantastic. Thank you for your insights today. Homin Lee, Senior Macro Strategist at Lombard Odier. More ahead on the Asia trade. This is Bloomberg.
Get some breaking news for you. We are watching the gold price in the wake of events in Iran and elsewhere, but it's broken a new record. We've got gold now at $4,550 an ounce US, so we have never seen a gold price at this level before. And Iran has warned the United States and Israel against any intervention as nationwide protests enter a third week. Casualties are mounting. World leaders and investors are watching closely for signs the Islamic Republic could be overthrown, and that would transform global geopolitics as well as energy markets. Bloomberg managing editor Jill Desis is following these developments for us. So, Jill, what is the latest on the ground in Iran? And bear in mind, we have seen protests like this before, but is this time looking a little bit different?
Well, at this point, Paul, the situation has really escalated very seriously. We've had, according to some activist groups who are tracking some of the developments on the ground there, 544 people have died in these protests, which are now stretching into a third week. Some 10,000 people have been imprisoned. So you are looking at some very serious figures, obviously. We've seen some of those images, those videos of protests unfolding over the weekend. Estimates of hundreds of thousands of people that have defied orders to stay inside, to come out into the streets and protest. So you are looking at what at this point is really the most serious challenge to the Iranian regime since at least 2022. Obviously, there is that threat that things continue to escalate. As we know, the White House, the Trump administration is also watching this incredibly closely. But yes, it does seem like things have really sort of escalated here.
Yeah, what exactly have we heard from the Trump administration? What sort of considerations do they have at this stage?
Yes, well, at this point, I mean, we've already heard from Donald Trump himself, very vocally talking about the fact that if, Iran fires on protesters, that consider military intervention. What we've heard, according to a White House official, is that Trump has actually been briefed on some of the military actions that are available to him, and he's actually considering something to that effect. So we are, again, hearing that the White House is very seriously considering the potential for some kind of strike or intervention in some way. But again, this is a very rapidly developing situation. We'll have to see, whether Trump himself comes out, more openly with some of any of these thoughts. But yes, ultimately, I mean, he has been cheering on these protesters, and he has, signaled that threat. We've heard from the Iranian side, basically sort of warning against the idea of any kind of intervention here. But as you can see, this is, obviously a very rapidly developing situation in Iran.
Jill, thank you so much. Our Bloomberg managing editor, Jill Desis, with the latest on Iran. Now, certainly oil traders are also watching these escalating tensions within the Middle Eastern country, and we're seeing that perhaps the geopolitical risk premium is being built back in, especially given what we're seeing in Venezuela of late. Let's bring in Steven Stepczynski, who leads our Asia energy coverage. So we have been seeing, things taking a turn for the worse in Iran, the concerns as one of the major producers within OPEC. How should markets be taking all this?
I mean, certainly you've seen over the last few days, as these the situation on the ground escalates, and as we do see what's happening on social media, as we see what the United States is also saying regarding this matter, we've seen oil prices rise. So clearly, we're still in the low $60 level for Brent. We're about $63 right now, but that's well off where we were last year. But we are up over the last three sessions, and I think the market is kind of taking in that potential risk. Let's just put some context here. Iran exports about 2 million barrels per day of oil. That's 2% basically of the global market. But still, that being said, it is sanctioned by the United States. It goes on shadow fleet vessels. If the U.S. tries to do anything to affect oil production, if they hit oil producing sites, if there any sort of attack they're affecting their output, you could see probably more of a knee-jerk response up in prices. Now, just again, looking at the current supply-demand situation in the oil market, there isn't any cause for concerns on, for example, shortages in the oil market. This is not the same oil market we were in, let's say, 2022 when we were above $100 a barrel for Brent. There's a lot of spare capacity around. OPEC Plus has the ability to add more barrels outside of Iran itself. As well, the U.S. production remains strong, and demand in top buy supplier, China, remains somewhat weak compared to where I think the market was expecting they were going to be a few years ago when they were removing their COVID restrictions. So all that put together is, yes, there is some concern. We are likely going to see some knee-jerk reactions, which we have seen over the last few days with prices rising higher, but there is plenty of crude in the market to be able to cover any immediate shortfall.
Stephen, who are Iran's biggest customers for its crude, and how could the demand dynamic change depending on how this situation unfolds?
I mean, China is a major buyer of Iranian crude. They're also a major buyer of Venezuelan crude, which kind of, to go into a segue onto that does create an interesting situation for China, because with those two suppliers together, that makes up not a large, not a majority of the supply, but it's a pretty good chunk of imports for China that they're going to have to go into the market and find replacements for if it does lead to a situation, because they're not getting the crude from Venezuela at the moment since the U.S. administration has stepped in. And if Iranian exports are affected as well, then they're going to have to find something else. Now, China has other potential suppliers that they can go to. So you're not going to see, again, shortages in China. But it is interesting that over the last few weeks, two, somewhat significant suppliers to China have been hit either domestically or because of U.S. intervention that has stopped the flow of that trade.
What is your sense of whether markets are appropriately priced for geopolitical risk? Because that's something that has been discounted quite heavily in the past year. Is this time to be, bringing that back to the fore?
That's a really good question. I think that's something that, if this were 2022 and we saw this happening, we would see prices spike on open 8%, 10%. And we saw that, right? Previously, when there was a conflict between Iran and Israel, we saw some pretty dramatic moves. It's much more muted right now. And I think the reason for that is justified with just the supply situation. The market is in an oversupply. The market is facing a glut. And so while there is this geopolitical risk and while there is this risk premium that's being built in, you're not seeing the reactions that you would have seen a few years ago. When you talk to traders and analysts, that should be justified, right? Because Iran, Venezuela, they're suppliers in the market, but they're not the biggest suppliers. And taking some of those barrels out doesn't necessarily change the supply balance as much as you would expect, given just how much of a glut that we're going into in 2026.
Steve, always great to get your analysis on energy markets. Steven Stepshinsky for us now. We also have some breaking news out of the mouth of the U.S. president. He's looking at Iran very seriously. They say comments also about how he has been getting hourly reports on the situation there, that they will be making a determination, that the military is looking at it, and that they're looking at strong options. Of course, we did hear over the weekend how the president had been briefed in terms of potential for military action in Iran. We have more ahead on the Asia trade. This is Bloomberg.
I just want to recap what we've just heard from President Trump regarding the situation in Iran. Of course, protests continuing. We now have more than 500 people reported killed. Now, previously, President Trump has said that the U.S. would look at military options if protesters were harmed. Well, they have been. The president saying we are looking at strong options, looking at it very seriously. The military is looking into it as well. President Trump now also saying we will call Elon Musk regarding Starlink in Iran because internet access has been severely curbed for pretty much the entire population in Iran. So the president also saying we will make a determination. In that environment, we have oil prices pushing higher and gold hitting a fresh record. Japanese media reports, meanwhile, say Prime Minister Sanae Takaichi is considering calling a snap election next month, adding to the speculation remarks from a party leader in her ruling coalition who cited a shift to a new stage in politics. Let's get to Tokyo now and our Japan stocks reporter Alice French. And Alice, markets in Japan closed today, but what sort of reaction might we anticipate when trading does resume?
Morning. Yes, but we've already seen this play out in the yen over the weekend, of course, weakening to its weakest against the dollar since last January on this news. Now, this potential snap election happening next month is perhaps not a surprise in itself. You know, when Takaichi took the top spot at the end of last year, she came in, you know, she's had a lot higher approval ratings than her predecessor. And so it's not perhaps unusual to assume that she may take this chance to call an election and kind of try and get that majority back in the lower house. Now, as you say, it is a holiday here today, so stocks and bonds not trading. But with that yen weakening, of course, that could be a tailwind for exporter stocks tomorrow morning. However, we do expect that it will probably pressure those bond yields. We know that Takaichi, of course, has this aggressive fiscal stance. She's already unveiled the biggest spending package since COVID, that 21 trillion yen fiscal spending package. And of course, there are worries about that fiscal burden. And now that we have this sort of potential election up in the air, there's going to be even more uncertainty, and that is likely to pressure those bonds and potentially send the yen even weaker in the coming days.
Alice, quickly as well, I mean, we're looking at perhaps a bit difficult to decipher what the Takaichi trade on Tuesday is going to look like, given how maybe there's a tailwind for tech-related stocks as well, following on from the performance in the U.S. counterparts on Friday. What are you watching?
Absolutely. And, you know, the Nikkei and the Tobix have already hit new all-time highs this year. So there are definitely a lot of tailwinds behind Japanese stocks. Like you say, of course, tech. In AI, you know, we have names like Tokyo Electron, SoftBank, those robotics names like Fanuc and Yaskawa. Of course, we're also coming into earnings season, and that's something that traders will be watching. At the same time, though, we have this ongoing tension with China, right? We know that China is talking about curbing those dual-use exports. That could kind of play out in things like rare earths, which, of course, is bad news for things like autos and could also play out in the chip sector. Now, investors will be watching that very closely to see how that develops. You know, this bilateral relationship has been very strained really since the end of last year. And some investors I've been speaking to have been saying that could be a major downside risk as we continue into 2026. But having said that, you know, the Takaichi trade, as you say, those tailwinds from the fiscal spending and the weaker yen set to continue, and even more so if she does call an election and if the LDP are able to bolster their position in Parliament. I think that will only be even more of a tailwind for stocks as we move forward. So it'll be interesting to see how it plays out with
great
this
to
week.
Get your insights on this. Thanks so much. We have to leave it there, running up against a hard break. Japan stocks reporter Alice French. More ahead on the Asia Trade. This is Bloomberg.
All right, let's take a look at how commodities are tracking. A lot of action in this space today. We're seeing New York crude, Brent crude continuing to rise, although off session highs. Also, we've got gold pushing higher, hitting a fresh record a little bit earlier there, still hovering near that record, 4,562 an ounce. Right. The reason being, on the left of your screen there, we're seeing continuing protests in Tehran, but those protests happening all across Iran at the moment. Widespread discontent with the regime following the collapse of the rial. Those protests much broader, more diverse than what we've seen in the past. Now, of course, Avril, President Trump previously said that if protesters were harmed, the US would look at getting involved. More than 500 people now confirmed killed. The president's saying on an Air Force One shortly, we're now looking at it very seriously, getting hourly reports. The military is looking at it, and we will make a determination. And that's not all he had to say.
Paul, we're also watching developments within the U.S. as you were speaking. Latest news crossing the terminal from the Fed Chair Jay Powell. And of course, we had been hearing prior to this that the investigation continues into Jay Powell. Now he is confirming that the Justice Department served the Fed with subpoenas and had threatened indictments. And Powell saying that this is really all about whether the Fed can continue setting rates independently. He also highlighted that these subpoenas were in relation to Senate testimony that came in June of last year, and really reiterating here that he will continue to do the job that the Senate confirmed him to do. We are, of course, going to be continuing to watch the developments on this. In the meantime, watching developments out of China as well, Well, leading figures in generative AI have warned that their country is unlikely to overtake the U.S. in the global AI race anytime soon. Our Asia Equities reporter Winnie Su is with us from Hong Kong. So Winnie, put things in perspective for us.
Yeah, it was quite an interesting development. We had leaders from Tencent, from Alibaba, and also Zhipu coming together. And the highlight over the weekend, over that conference, was that they say that it's unlikely for any Chinese company to actually beat competitors in the U.S. like OpenAI. The chances of that is a mere of 20% in the next 3 to 5 years, and that's mainly been driven by how these U.S. companies have been focused on research, while Chinese companies are quite stretched when it comes to just busy delivering these demand. And also the resources are a bit more limited, as well as these exports from the U.S. when it comes to chips and key chip making materials. So it really goes to show how why the government has been trying to push further for these tech innovation and also tech self-sufficiency in this catch-up race with the U.S.
Winnie, it also seems like incitement is really building for China's AI-related shares right now. We saw a couple of IPOs last week. What are we expecting to see from here?
Yeah, exactly. These pipelines, IPOs pipelines, are really exciting. Like you mentioned, we have just last week, actually, from 2 big companies, including Zhipu, and also just last month, right, in December, we were talking about MetaX and more Threads. And for now, we're expecting more of these IPOs to come. And beyond that, we actually also have pretty strong earnings expectations when it comes to these Chinese technology shares. Bloomberg Intelligence actually is expecting the top 8 Chinese tech companies to have to beat the earnings growth compared to the Max 7, first time since 2022. So lots of excitement when it comes to the fundamentals of these Chinese companies. And also when it comes to DeepSeek, we actually heard this morning from local media that DeepSeek is also expected to release their latest flagship model in February. So lots of enthusiasm in terms of what they can show when it comes to their breakthroughs as well.
Not just these Chinese names that have enjoyed investor optimism. Overall, across Asia, that optimism for AI names does look to be quite strong.
Yeah, exactly. That's probably why we're seeing the Asia IT index still outperforming NASDAQ so far this year, and that's an extension from last year. And we're talking about tech-heavy Kospi index. Actually, so far this year is the best performing gauge worldwide, over 10% gains, and still rising today. In fact, rising for every single trading session so far this year, and that's been driven by, yes, that solid results from Samsung, but also just overall excitement for that AI space and Asia's supply chain. And when it comes to an excitement for Asia tech names, it's also the expectation when it comes to still the cheaper valuation and further earnings growth. When we checked the data last week, we're talking about this year Kospi earnings expected to rise about 80% over the next 12 months. Taiwan a bit less, but they're both more than what we're expecting for the NASDAQ, which is about 28%. But all eyes right now is really on earnings, if it's going to deliver or not. And we have TSMC for this Thursday. And so far, the revenue has beat expectation, as we saw on Friday. But also, analysts have been rushing into raising the target price ahead of earnings. So lots of expectations over there as well.
All right, Winnie Su, Bloomberg's Asia Equities reporter there. Well, as President Trump's tariffs reshape global trade flows, China is stepping into the vacuum, exporting capital as well as goods and planting the seeds of future jobs, productivity and innovation abroad. Bloomberg senior economics writer Sean Donnan joins us now with more on today's Big Take. So, Sean, can you give us some examples of how this trend is playing out at the moment?
Look, absolutely. And I think wherever you look in the world, you're seeing some pretty clear trends. One is U.S. companies that are downsizing their operations overseas and bringing production home, and Chinese companies that are building, whether it's battery factories or data centers out there in the world, and are creating jobs in the rest of the world, as the U.S. Is trying to bring a lot of the jobs that it had offshored in recent decades home. It's a fundamental flip in the script, if you will, that we've seen in the global economy in recent decades.
How closely are some of these businesses or investors watching the potential for the Supreme Court ruling in perhaps coalescing or finessing the Trump administration's policy on tariffs, and what implications might that have on capital flows?
Sure. Look, everyone is watching that incredibly closely. We've got a huge amount of tariff revenue that's at stake there. It's as much as $150 billion that's been collected by the U.S. That potentially would have to be refunded to a lot of companies. That's material for the corporate world. And so that's certainly something people are watching. But what we're talking about here in terms of these patterns of investment are longer-term investment patterns. These are bets that in some cases were starting before the Trump administration came in on the longer term path. And if you go back to the Biden administration, even then they were encouraging U.S. companies to repatriate production and providing a lot of subsidies for electric vehicle plants, solar production, and so on. So, it has accelerated under the Trump administration, but this is literally the bet on the future of the global economy, rather than that short-term response that you have when we're talking about tariffs right now and the flows of trade and of goods. And that really is where we are seeing China go out into the world. Again, it's becoming the creator of jobs in a lot of countries, and U.S. officials are very aware of this, while the U.S. is really trying to repatriate jobs at the same time. And that means for all these other countries like Thailand, Indonesia, Vietnam, Spain, Mexico, that they are kind of caught in between. But they have one superpower that's coming and creating jobs right now, and another superpower that is retreating.
Sean, great piece. Thanks so much. Our Bloomberg's economics senior writer, Sean Donnan. Now, we also have been tracking developments in relation to the Federal Reserve. And in this past hour, of course, that opening of that investigation, that's the latest word on Fed Chair Jay Powell, hearing from him that the Justice Department has served the Fed with subpoenas. It has threatened indictments. And we are seeing, against the backdrop of these geopolitical concerns as well, that gold looks like the clear bid this Monday morning in the Asia session, extending those gains past already what was a record high. And of course, with investors really digesting what's to come from the Fed, whether this affects its autonomy, especially with the Fed chair's term set to run out in May. We are seeing already, in terms of U.S. stock futures, that slide of about 0.4%, despite the rebound we saw on Friday following the jobs numbers. More ahead on the Asia trade. This is Bloomberg. Let's take a look at how markets are faring. Of course, it's been quite an eventful morning here in the Asia Pacific. We're getting news lines from Chair Powell in relation to being served, the Fed, with subpoenas, threatening indictment, and all this in relation to the renovations for the Federal Reserve headquarters. And of course, there was some commentary coming through about how he will remain committed to serving as he has been following that confirmation from the Senate, we are seeing that risk off in a way, I suppose. If you take a look at how U.S. futures were faring just a short while ago, as we showed you, but the clear beneficiary, I guess, for trade today is what you're seeing in gold, 2% higher in the early goings, and this is against the backdrop of what we saw in Iran over the weekend, those widespread protests, the concerns that this is adding to the geopolitical risk premium, and we have, of course, been seeing the oil prices climbing against the backdrop. Now, the other issue for markets to contend with, of course, was what we got on Friday, or the lack thereof, from the U.S. Supreme Court in terms of its decision, a ruling potentially on tariffs. The court now says that Wednesday will be the next opinion day, and markets, of course, waiting for the ruling on the legality of Trump's tariffs. And the court, of course, never says in advance which decisions are ready for release, only that rulings in argued cases are possible. We, of course, watched shares of major U.S. retailers tumbling Friday because of the lack of clarity. We are bringing in now for an analysis Deborah Elms, Head of Trade Policy at the Hinrich Foundation. Deborah, always good to see you. So I've just talked through a number of factors, but I guess top of mind for investors is that this decision is getting delayed yet again. What's the risk that it gets delayed beyond Wednesday, and how do we, adjust to all this?
I think it could continue to be delayed. I mean, the court has to rule this term, but the term runs all the way until late June, early July. And so it could be at any time between now and then. That being said, the court recognizes the importance of this case. And in fact, on Friday, the courtroom was packed because people thought it was going to be the tariff ruling. And then when it wasn't, they themselves recognized that there was going to be some dismay in the audience. And so I think they understand the urgency of getting some decision made on these IEEPA tariffs with the Supreme Court. But I think it's just unclear how long it will take for them to actually issue this ruling.
Talk us through the considerations for the Supreme Court. I mean, everybody's watching this decision.
Yeah, I mean, I think one of the challenges for the court is that they have a regular schedule, which is always very packed. But because of the Trump administration's issuing of a lot of emergency decrees like IEEPA, the court has additional responsibilities now that they've never had before. And so on top of the regular working order, they're also getting all of these kinds of urgent cases on an expedited basis, of which IEEPA is one of the most important early on in this court's term. And so I think they're struggling, if I were to guess, between regular business, all of these urgent cases, and they don't want to get it wrong. And so on tariffs, they're trying to decide, does the president have the authority under this statute to issue tariffs? And is this they don't need to decide whether it's an emergency or not. They just need to decide, does this statute, which says regulate imports, include tariffs or not? But the implications of that decision are profound. And so I think that is causing, I'm sure, a certain amount of heartburn among the Supreme Court justices.
Deborah, next decision day or opinion day is Wednesday. Where do you place the odds that we'll actually hear something on Wednesday? And also, we've got to remember the court has a 6-3 conservative majority. Do you think that's going to have any influence on the decision that we get?
Well, early on, I thought that the court would be quite deferential to the president, because they have been quite deferential to the president. They are, as you just mentioned, overwhelmingly conservative. They're not all Trump-appointed judges, but they lean in that direction. But I think what was interesting is that during the hearing phase of this court case, there seemed to be more skepticism issued by the justices than I might have anticipated. And so that makes me, I'm not 100% confident, but it makes me more confident than I would otherwise have been that perhaps they're going to rule against the administration in this particular case.
All right, well, let's assume you're correct, and we'll run that hypothetical. SCOTUS strikes down the tariffs. Does it really mean anything in the longer term, though? Wouldn't just the Trump administration legislate these tariffs in a much more robust way?
I think it's possible. I think so. If we say, let's imagine that he wins, I think that's the easier one. If he wins, then he has the authority to issue tariffs at any moment, on anything, on anyone, at any time. That is actually quite a bit more alarming, I would argue, than if he loses. So let's assume that he wins. He can use tariffs at any time for whatever. If he loses, he will still pursue tariffs, but he will have to do so in sort of different ways. Now, that doesn't mean that we actually have to follow policies and procedures that used to apply, but it does mean that he's a bit more constrained. He can't sort of decide on a Thursday at noon that he's going to apply tariffs at Friday at midnight, but he will have more tariffs coming. So whatever the court decides, we are still looking at a high tariff environment and at a lot of chaos and uncertainty for a fairly long period of time.
Say he wins, that seems to be the assumption. What is that going to mean for the durability of the U.S.-China trade détente?
Great set of questions. I mean, one of the issues, remember, we have more than one kind of tariff that's currently in use. So we have a certain number of tariffs that are under this IEEPA reciprocal tariffs, and some of those apply to China, some of those do not. There are other kinds of trade statutes this administration is using, like Section 232 and Section 301. Those are not under review by the court. So if he wins, he still has this panoply of cases, and he can still use IEEPA whenever he chooses, particularly should he choose to do so against China. That, I think, is a very fragile kind of truce that we might have. If he loses, he's a bit more constrained, I think, and I think the Chinese would probably breathe a bit more of a sigh of relief over whether or not they can continue to maintain this fragile truce through 2026. So I think that's why we're all so keen to see what the court actually decides and why there is this extraordinarily level of interest in court decisions by people who never watch the court ever.
When it comes to tensions, though, for China, it's not just with the U.S. I mean, you're seeing that diplomatic front also with Japan. How have you been seeing trade flows adjusting amid all this?
We've seen some really interesting numbers, right? So the trade flows in and out of the U.S. have gone down in many cases, but trade hasn't stopped. And in fact, trade has continued to escalate, including across Southeast Asia, where the numbers are more robust than might have been anticipated. There's a lot of reasons for that, but one of them is, trade matters. We have an export-determined outcome in this region. Everyone wants to export. They're going to continue to do that. And so I think the uncertainty is going to continue, but at a certain point, firms just have to make decisions and move ahead. And I would expect that across 2026, we'll still have trade, it will still be disrupted, but firms are going to have to start making decisions. A lot of them that have been sort of waiting to see if there's more clarity coming. Clarity is not coming, I'm afraid to say. And so you'll have to just choose what you think is the most likely scenario in a set of perhaps not so desirable outcomes.
All right, Deborah Elms, Head of Trade Policy at the Hinrich Foundation there. Thanks so much for joining us. Now let's get back to one of our top stories this hour. Fed Chair Jerome Powell says the central bank has been served grand jury subpoenas from the Justice Department threatening a criminal indictment related to his June congressional testimony on ongoing renovations at the Fed's headquarters. Let's get to Bloomberg's managing editor, Kate Davidson. And Kate, Jerome Powell's had some fairly strident words to say about this, saying it's not about the renovation of the Fed headquarters. This is about intimidation. He says it's about whether monetary policy will be directed by political pressure or intimidation. What are the market implications here? We're already seeing some big moves in gold prices.
Yes, I mean, I think that for much of the past year, people had really, and markets, investors in particular, had really taken this pressure from the White House in stride. The Fed was holding off on lowering interest rates, waiting to see sort of how the economy would settle out. And there were some harsh words coming from Donald Trump and even from some other administration officials, but there hadn't been much reaction. And certainly, I think that Jay Powell had kind of avoided really pushing back too hard on this pressure. When he was asked about it, he'd say, we're keeping our head down, we're doing what's best for the economy. So this is obviously a pretty remarkable escalation, and then pretty surprising or at least pretty harsh response from the Fed chair himself, where he had kind of avoided directly challenging some of this pressure that we'd seen. And here he's clearly saying this is just, basically without saying as much, it's inappropriate. I mean, it is beyond, it's crossing a line, it would seem, in his view. It's not really about oversight. It's just about pressuring the Fed to follow the preferences of the president, as he said in his statement.
What are some of the legal options here for the Fed chair, you think?
I mean, that's probably, in fairness, it's probably a good question for our legal colleagues who are trying to kind of sort this out, I would imagine. Chair Powell doesn't really address in the statement what the Fed's response is going to be from a legal perspective, other than to simply say that he is going to continue in his job. He was confirmed by the Senate, and his term doesn't expire until May. So, not clear what the implications might be for him or his job. We know in the past the president has floated the idea that he might like to fire Jay Powell, and he's seeking to fire another Fed governor, Lisa Cook, and that case is tied up in the courts right now. So not exactly clear how the Fed will respond or what they might do, but Powell was very clear he's going to continue serving in his Senate-confirmed role for now.
Kate, it's one thing to indict the Fed chair, but it's another entirely to deal with what the bond market might have to say about this. How would one expect the bond market to react if there's any whiff that the Fed is no longer relying on data, instead of just doing the bidding of political masters?
Yeah, I mean, well, we've long expected that the bond market would not like that at all. And again, we've been a bit surprised that the reaction to some of the pressure we've seen from this White House has been fairly muted. And so this, again, being a clear escalation, I would think would certainly cause some jitters in markets. And that's something that we know that this White House does, in fact, care about. They pay very close attention to it. So, we haven't seen anything from the president specifically about these subpoenas, weighing in on them in any way. This is from the Justice Department. But I think that the folks in the White House, in the administration, they will be watching carefully, I'm sure, to see how the bond market reacts.
Kate, the hope is that in terms of the U.S. data, we get more clarity after the fracas from the government shutdown. We had those jobs numbers. Inflation is up next. Does that help to take some of the heat off this very divided Fed?
Well, I think that it does rule out for now the need for any near-term rate cuts. It wasn't a great jobs report. There's not a lot of hiring going on by U.S. employers, but certainly it seemed to ease some concerns that there's some sort of dramatic deterioration that's happening. So Fed officials are weighing this prospect of a sharper slowdown in the labor market with the prospect of higher inflation. And so at least on the jobs front, I think that they've been reassured a bit that they don't need to keep, at least most of them, I think, probably reassured that they don't need to keep cutting immediately. It looks like June, that's what markets are expecting anyway, probably next rate cut sometime in June.
All right, U.S. Economic Policy Managing Editor Kate Davidson there. Let's take a look at how markets are reacting to the heavy news flow today. Jay Powell calling this indictment or this subpoena a pretext, the threat of criminal charge a result of the consequence of the Fed setting interest rates based on our best assessment of what will serve the public. That's it from the Asia Trade Markets. Coverage continues on a very busy day as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen. The China show up next. This is Bloomberg.